Good morning, everyone. It's Jen Tozer here from sunny California. Oh wait, that was just wishful travel. I'm actually still here in Calgary. That's okay. Today I wanted to talk to you about what's on my mind, which is inflation. We've heard a lot about that right now in the markets, and it's created a bit of volatility. So what is inflation? Inflation is really a very simple concept. It's just a price going up. But there's lots of different types of inflation. There's demand inflation. That's when everybody wants something. If you try to sell or buy a trampoline over the last 18 months, you would know what demand inflation is. There's supply chain. Supply chain is when you have a hard time getting things. So if you think about Ford, for example, has announced that they're only going to manufacture vehicles that are ordered because they're having a hard time getting some of the semiconductor chips, semiconductor parts that they need to manufacture those vehicles. You have disruption in supply chain. That's what's happening right now with the cyber, piracy attack that's going on in the United States with the oil. So those are all different types of inflation. But the inflation that affects us the most in the market is one where they perceive that the economy is overheated. And then they raise interest rates, and that causes the economy to slow down. So I think we're a little bit far ahead of ourselves if we think that's what's happening next. And here's the reason. I was talking to a client the other day and they said to me, did you know the Dow was up 40% over the last 12 months? And I'm thinking, 40%? Well, I looked it up. It was, if you went from March to March. But in my mind, that's just recovery. When you have a fall and a recovery, I don't consider this part huge inflation. I think you need to get back to your starting point before you can determine if there's inflation or not. So if you look at the economy in the US or in Canada, we're still coming out of that hole. So yes, between this low point and today, we've had inflation because we're getting back to where we were. And on the note of inflation, a little bit of inflation is actually good. It's a sign of a healthy economy. It gives people higher wages, it gives people more flexibility, and for the government, it allows them the flexibility to turn around and decrease rates if there's a problem. Now, are we there yet? No. And let's talk about the absolute levels of interest rates. They are so low right now. And everyone is leveraged in their housing. So if you have your 5-year mortgage at 2%, that's great. But if it moves up to 2.5%, that's a 20% increase. Are you going to get pushed out of your house? Probably not. And in Canada, when we actually are applying and qualifying for mortgages these days, they have you qualifying at higher interest rates with the expectation that these are artificially low rates and not high rates. So when you talk about inflation, yes, it's out there. Yes, it makes the market jittery. And this is a period of time that's very easy for the market to be jittery because we've had 12 months where the market's gone up. We forgot about the part where it went down. So we're getting back to where we are. And what's going to calm it down? June. Why June? Not because the flowers are out, but because we get earnings. And that brings us back to where we actually are. So those are my notes for today. I hope you have a great day. Call me if you need me because we're here. Thanks very much.